Hello and welcome to Livewire Markets. My name's Tom Richardson and today I'm sitting down with Liam Donohue, the co-founder of Lennox Capital. Liam's going to talk to us about its small cap fund and its investing philosophy. Liam, welcome.
Thank you for having me.
First up, for people that might not know, can you just tell us a little bit about Lennox's small cap fund and how you think about making money?
Yeah, sure. Well, I suppose in terms of the background of Lennox Capital Partners, we're an independent funds management business. We specialise in investing in small Australian businesses, which is a really exciting part of the market. Our investment process, or how we make money, is through research-led, bottom-up, company-specific investments. We are a conviction manager, so we tend to only hold a relatively small number of positions, and we think that's the best way to make money in Australian small companies. And I suppose in terms of our background, my business partner James Doherty and I have got over 20 years of experience in the funds management industry. A fair portion of that time was spent at Macquarie Funds Management, which was a really interesting place to work for a long period of time. We managed the Macquarie Small Companies Fund for several years. Learnt a lot there, met a lot of great people, but I suppose one thing it also engendered in us was an entrepreneurial spirit, I suppose you'd say. And ultimately that led to us leaving Macquarie and starting Lennox Capital Partners a bit over 8 years ago now. So it's been a really interesting journey, one that we've thoroughly enjoyed, and long may it continue.
As an investor, if we think about the macro, we hear every day new headlines about the trade war, trade truce. Does that influence your approach in picking stocks?
Yeah, well, I suppose one thing it certainly influences is the level of excitement in the office every day, because it definitely keeps us on our toes. Every morning you can guarantee with the US market lead-in there's going to be some topics of interest, whether it is, as you say, tariffs, trade negotiations. There is a lot going on that front at the moment. And I suppose ultimately where that manifests in our market is probably in increased volatility. What that doesn't do for us is change anything in terms of our investment process. So, as I mentioned, we are very focused on company-specific research, bottom-up research, really getting into a deep understanding of the businesses that we're investing in. And that process doesn't change just because the market has become more volatile. But I suppose one thing we do need to be conscious of is that the landscape at the moment, again, is changing on a daily basis, and trying to forecast that is very difficult. But we do need to take that into account in terms of our research. And an example of where we might do that is a business that we're potentially looking at investing in. If they sell products into the US market, we'll obviously need to take into account any potential tariffs that may impact on that product. A big part of our process is forecasting the earnings of a business, and obviously an incremental tax or tariff, and how much of that cost is absorbed by the business as opposed to being passed on to a customer, will clearly impact on profitability and the earnings of a business.
And beyond tariffs, small cap end of the market, are there any other big trends you're seeing? And there's a lot of talk about index tracking, passive funds distorting valuations.
What we absolutely need to acknowledge on that front is that passive investing is here to stay. It's been a tremendously successful part of the market, and I doubt that's going to change. Probably one trend that we are seeing is that over the past 3 or 4 years, there's clearly been a headwind there for small companies generally. We know that when economic conditions slow down, that smaller companies are disproportionately impacted, and that has certainly been the case over the past few years. We've definitely seen feedback from companies that we're engaging with that the tide is starting to turn, and that is flowing through very early days, but is starting to flow through to earnings. If we see a bit of a rebound in the Australian economy, and there is also talks of interest rate cuts, which again disproportionately impacts small companies, the flow on from that, which is probably even at a more embryonic stage of the trend, would be an IPO window reopening. Again, it has been a pretty slow 3 or 4 years for IPOs. There haven't been many deals coming through, but with earnings positivity returning to the market, potentially interest rate reductions and the flow on impact to the cost of capital, potentially making the listed market a more attractive opportunity for vendors looking to sell their businesses. It does feel as though that window is slightly ajar at the moment. Obviously, we need that momentum to continue for the window to fully open, but that is a very very embryonic trend that we are starting to see in the market at the moment.
In terms of your research process, I think you mentioned bottom-up stock pickers, and I read your latest fund update. You said you're looking for the next industrial gem. So could you just tell us what kind of qualities do you really like to see in companies?
We're absolutely industrial focused investors. I'd love to say we only invest in industrial gems, but that's maybe not always the case. But coming back to our process, we are very focused on our ability to forecast the earnings of a company. And as a result of that, we tend not to invest in mining and energy businesses because we find forecasting their earnings very difficult. So we stick to the industrial set. But in terms of I suppose factors or qualities that we tend to focus on to try and find the next big winners, really it boils down to two areas for us, being the quality of management and the sustainability of a business. And looking at the quality of management first, anyone who's worked in a small business or even started a small business would know that there's always going to be a real focus on a small number of key staff in terms of the success or otherwise of a business. And that is absolutely the case for listed small businesses as well. So part of our job is engaging with those people and really understanding their view on the business that they're operating and where that business is heading. And then secondly, from a sustainability perspective, even though that probably has a bit of an ESG tilt to it or sound to it, what we're not trying to do is be dark green investors and ensure that the companies we're investing in are only of the gold standard ESG nature. What we're trying to do here is use ESG as a proxy for risk and to understand any major environmental, social or governance risk that may face the business, and then ultimately how they plan to manage and mitigate that risk. So again, assessing the quality of management and then the sustainability of the business and its earnings are, for us, probably the two key factors that we assess in terms of trying to identify those next winners.
So I have to ask then, is there a couple of stocks or companies that fit the bill for you?
Yeah, absolutely. There's always a couple of interesting stocks to talk about in small caps. The first one is probably Botanix Pharmaceuticals. It's always quite a topical business. They're a relatively new name, I suppose, to small cap circles, but one that I think will become increasingly well known over coming years. The business has a product that is being sold into the US pharmaceutical market, which again is quite a topical market at the moment. But it follows several years of trials, testing, approvals, and now commercialisation, which is no mean feat, as anyone would know. Trying to get a product through that entire process and then live in the US market is a lot of work. Botanix have done that with a product called Sofdra, which is a treatment for a condition known as hyperhidrosis, which is effectively excessive sweating. And even though that sounds like quite a niche part of the market, it affects around 1% of the population. So when you think about the American market, that's actually quite a lot of people that are potentially in line to use this product. And one thing we really like about the market that Sofdra is being sold into is the incumbent players or incumbent products are quite clearly inferior in our view. And one of the alternatives is to have Botox injected into your underarms to effectively stop your sweat glands from functioning. So when you weigh up the Sofdra product, which is effectively like applying a roll-on deodorant, to having Botox injections into your underarms, I think it's a pretty clear preference for the Botanix product. In addition to that, we really like the management team. They've got runs on the board in terms of commercialising these sorts of formulations previously in the US market. So we would absolutely back them to continue the rollout in America and make a real success of it. And I suppose stopping short of putting an actual price target on the business, suffice to say, we think it's worth multiples of the current share price. So we think that one's going to be a really good business for years to come. And probably a second one, which is maybe at the other end of the spectrum, has been around for quite a while and should be well known to many Australian investors, is O Media. They're the largest outdoor media operator in the Australia-New Zealand market. We've been invested, full disclosure, for several years as well. But the reason we're excited about the business now is that there does seem to be a confluence of factors that places the business in a really good position today as opposed to over the past few years. And we'd probably argue the business is in the best spot it's been in since probably prior to COVID. And what's driving that? Some structural tailwinds in terms of advertising domestically has been pulled back from traditional media like free-to-air television and has been reallocated to areas like outdoor media and digital advertising, which benefits O. But that has been probably hidden a little bit within a more cyclical headwind of reduced advertising budgets. So it seems as though from industry data, the cyclical headwind is becoming a tailwind and advertising budgets are starting to rebound. And we think that when that cyclical tailwind combines with what has been an ongoing structural tailwind, there'll be some really good revenue growth for O Media over coming years. And obviously that's been absent from the business for the past few years, but management, to their credit, have used those last couple of years of softness to really increase the operational efficiency of the business. And they've done that really by managing cost tightly, getting a bit of cost out of the business. And what that should mean over the coming years is that as revenue growth returns to the business, they get some really strong operating leverage and really good earnings growth.
So where would you typically see their adverts? Is it at airports, on the side of motorways?
Yeah, it's a real mix. Absolutely motorways, but definitely in airports, in supermarkets. Also, you'd see them around many CBDs in what's referred to as street furniture. So they are quite prevalent. And once you see the O logo, you'll start to notice it everywhere.
Sure. And just on Botanics, can they get into regional markets outside the US, or is it just that the US is so big they don't really need to worry about that? Or?
Yeah, it's a little bit of both. They do have longer term plans to move into markets outside of the US, but as you say, the prize in the US market is so big at the moment, and that opportunity is so early. That is the absolute focus of the business in the short term, but absolutely over the medium to long term, I'd expect them to move outside of the US as well.
And in terms of how they distribute the product, do they have a partner to do that for them, or they're doing it themselves? Or?
It is actually a very clever distribution plan where the product needs to be prescribed. So the customer will always have to go and see a dermatologist, a specialist, to gain access to that product. But Botanics then offer 12 monthly repeats for the product, and then effectively deliver that product to the customer's doorstep at the start of every month. So once a customer has been prescribed that product, they are near guaranteed to use it for the next 12 months because the product will magically appear on their doorstep for the following 11 months. So it's a really clever distribution model, and you'd expect that after a year of using the product, if it is successful, and that's effectively what we're backing here, if it is successful, you'd expect to have a customer for many years to come. So a really sticky and clever business model.
Well, generally, I guess the fund's historical performance has been really strong, but it's the future that counts, right? So how's the fund positioned for the future?
Without sounding horrifically boring, the job for us, or the challenge for us, is to stick to our knitting. We've got a tried and tested investment process. We know it works through cycles. And the challenge for us, given the increased volatility, is to absolutely stick to that investment process and deliver to investors what we've promised to deliver to them. And I suppose how that presents itself is by taking a long-term view and focusing on what we think the earnings and the valuation of these businesses will be over the medium to long term, and using short-term volatility to really capitalise on some of those opportunities. So we have a very clear view on what we think businesses are worth over the medium to long term, but in the short term, and particularly currently over the short term, we're seeing quite a bit of volatility result in potential mispricings in some of the businesses that we follow. So our job is to continue taking advantage of those opportunities, But I suppose the job for investors is to come with us on the journey for that long-term view where we think ultimately they'll be handsomely rewarded.
Great, Liam, thank you very much for coming in today.
Thank you, Tom.
If you'd like to see more content like that, please visit our website at livewiremarkets.com or subscribe to our YouTube channel.